Hi, I'm going to go through Chapter 9 quiz right now for those of you who are interested, and this is on page 160 of the textbook. So, which statement best explains the sentence, "To recover a commission for brokerage services, a broker must be employed by the agent of the client"? A, the broker must work in a real estate office. B, the client must make an express or implied agreement to pay a commission to the broker. C, the broker must express an interest in representing the client. And D, the broker must have a salesperson employed in the office. So we're talking about what best explains the sentence. And it's, again, to recover a commission for brokerage services, a broker must be employed as the agent of the client. That would be B, because it's the client must make an express or implied agreement to pay a commission. 2, sales associates are paid in a lump sum, who are paid in a lump sum, and who are personally responsible for paying their own taxes are probably treated for tax purposes as A, employees, B, buyer's agents, C, independent contractors, and D, transactional brokers. It's not employees. Employees get their taxes withheld. Buyer's agents doesn't really have anything to do with how a sales rep is employed by a broker. C, independent contractor, is the right answer. That's also known as a 1099 contractor. And then transactional brokers are those brokers who are paid basically for just performing specific services. Doesn't have anything to do with how taxes are paid. 3, a sales associate contract with her broker states that she is not an employee. In the past year, less than half her income was commission, with the rest an hourly wage paid by the broker. The IRS would classify her as A, self-employed, B, an employee, C, an independent contractor, and D, a part-time real estate salesperson. Again, we're talking about how the IRS is going to classify her, and that would be as an employee. And the reason being is even though her contract with the broker says that she is not an employee, IRS has their own rules, and less than half of her commission, less than half of her total compensation was in commissions, so that means more than half was an hourly rate, so the IRS views her as a employee, so B is the right answer there. 4, when acting as an employee rather than as an independent contractor, a sales associate may be obligated to, so this is where they're an employee, not a 1099 independent contractor, list properties in his or her own name. That's a big no-no. You never do that. You can only list a property in your own name if and when you are a broker. Work set hours. C, accept a commission from another broker. Again, you can never, as a sales agent, accept a commission from another broker. The only commission that you can be paid is from your own broker. So if you're entitled to get paid through another brokerage, say there's another brokerage that actually is the listing broker, and you bring the buyer there, what happens is the listing broker pays your broker, and then your broker pays you. You are never paid by anybody but your broker. Or D, advertise property on his or her own behalf. Again, you never do anything on your own behalf. You always do everything in your broker's name. But the question is, when acting as an employee rather than an independent contractor, a sales associate may be obligated to, again, the answer is B, work set hours, because if you're an employee, they can dictate to you a lot more. They can dictate to you the hours you need to be there. They can dictate to you which sales meetings you need to come to, etc., etc. 5, Terry is a personal assistant of a real estate sales associate. Terry must be paid by the broker who employs the sales associate. This means that A, Terry has a real estate license. B, the sales associate doesn't make very much money. C, Terry is a part-time employee. D, ultimate responsibility for Terry's conduct in the performance of work-related activities lies with the sales associate. So let's look at it again. Terry is the personal assistant of a real estate salesperson. And Terry is paid by the broker who employs the sales associate. This means that, again, the answer is A, Terry has a real estate license. Terry is a sales associate, so they have to have a real estate license. Terry is a part-time employee, doesn't have anything to do with anything. And then ultimate responsibility for Terry's conduct lies with the sales associate is not correct. Terry is an employee of the broker, so the ultimate responsibility lies with the broker. 6. A broker would have the right to dictate which of the following to an independent contractor. Again, this is the typical salesperson in Ohio where you're a 1099 independent contractor. So this is where a broker would have the right to dictate this. A, the number of hours the person would have to work. B, work schedule the person would have to follow. C, sales meetings the person needs to attend to. And D, conduct in compliance with statutory law and regulations. The first three are incorrect. Those are things that an employer can dictate to an employee. Independent contractor is not an employee, but a broker does have the right to dictate to them certain conduct that they must abide by to comply with all of the statutory requirements of working in the real estate profession. 7. 2 real estate professionals were found guilty of conspiring with each other to allocate real estate brokerage markets. That's a violation of the Sherman Antitrust Act, which is federal, as well as the respective state antitrust laws. A seller suffered a $90,000 loss because of their activities. If the seller brings a civil suit against the 2 real estate professionals, what can the seller expect to recover? A, nothing, because a civil suit cannot be brought for damages resulting from antitrust activities. That's incorrect. The federal government can sue you. It's a crime. They can fine you and put you in jail, but an individual can bring a civil suit as well and sue for damages. B, only $90,000, the amount of the actual damages the seller suffered. If you remember when I was teaching this earlier in the chapter, antitrust laws, violation of that is one of the few laws that allow what's called treble damages, which is triple, so 90 grand is not the right answer. C, actual damages plus attorney fees, and D, $270,000 plus attorney's fees and costs. So D is the right answer. 90,000 times 3 is 270, and I did fail to go through with you when I was teaching that part that not only do you get actual damages, but you also are entitled to attorney's fees. 8, 2 sales associates who work for the same firm, and the key there is same firm, agree to divide their town into a northern region and a southern region. One sales associate will handle listings in the north, and the other will handle listings in the south. Which statement is true? A, the agreement does not violate antitrust laws. That's true. We know, as I went through it previously with you, all of those things that are violating the antitrust laws are only violating it if you are in 2 or more different brokerages. You could do any of those activities within your same broker firm. The agreement constitutes illegal price fixing. Well, that's not true. It doesn't have anything to do with pricing. C, the 2 sales associates have violated the Sherman Antitrust Act and are liable for treble damages. They've not violated the Sherman Antitrust Act because it's okay to do all of those activities if you're within the same firm. D, the 2 sales associates are guilty of a group boycott with regard to other sales associates in their firm. Again, okay if it's in the same firm. So the right answer there is A. 9, a state has recently updated its rules and regulations for the real estate profession. Assuming the state is like all others, which statement is true regarding the publication? A, the rules and regulations are state laws enacted by the legislature. Well, that's absolutely incorrect. The question just said they've updated their rules and regulations. B, the rules and regulations do not have the same force and effect as a statutory license law. That is also incorrect. If you remember, I stated that any of those regulatory or administrative type of rules and regulations that the state level real estate board or commission makes has the same force and effect as statutory laws created by the Congress. C, the rules and regulations have the same force and effect as the license law itself. That's what I just stated, so that's the right answer. And D, the rules and regulations are not enforceable against real estate professionals, which is absolutely incorrect. 10, after a particularly challenging transaction finally closes, the client gives a sales associate a check for $500, quote, for all of your extra work. Which statement is accurate? A, such compensation is irregular but appropriate for the sales associate to accept. B, the sales associate may receive compensation only from his or her broker. C, the sales associate should keep the check and deposit it immediately in a special escrow account. And D, the sales associate broker is entitled to 80% of the check. The right answer is B. Just remember, you can never get paid by anyone for a real estate transaction once you're a licensed sales agent from anybody except your broker. You have to be very, very careful with gifts when they're given to you, and you're not able to collect ever cash or a check from a client, even if it's well intended. That's something you're not able legally to accept. 11, a broker has established the following office policy. All listings taken by any sales associate of this real estate brokerage must include compensation based upon a 7% commission. No lower commission rate is acceptable. If the broker attempts to impose this uniform commission requirement, which statement is true? That right answer is D here, which says the broker may, as a matter of office policy, legally set the minimum commission rate acceptable for the firm. Again, this is not a violation of the antitrust laws, Sherman Antitrust Act, because it is being done within a brokerage or within a actual office of a brokerage, and the company is permitted to set its own policies on what the sales commissions are going to be. 12, a real estate company has adopted a 100% commission plan. The monthly desk rent required of sales associates is $1,500, payable on the last day of the month. In August, a sales associate closed a transaction that earned a commission of $11,370, and a second transaction that earned a commission of $6,875. The sales associate's additional expenses for the month were $2,170. How much of the total monthly income did the sales associate keep? This is a pretty simple math question, so we just have to understand what the sales agent was able to keep after all of his expenses. First, it was 100% commission, which is a great commission, so you add the $11,370 and the $6,875 together, which are the two commissions he made that month. So that is $18,245. You subtract the monthly desk charge of $1,500 from that number, and you also subtract the other charges of $2,170, and I just screwed that up. But the answer is $14,575 is the amount of money that he gets to walk away with. 13. Sales associate took a listing on a house that sold for $329,985. the commission rate was 5%. A sales associate employed by another broker found the buyer. The seller's broker received 60% of the commission on the sale, and the buyer's broker received 40%. Typically, that's 50-50, but in this particular situation, the listing broker was retaining 60% of the entire commission, and the buyer's broker was getting 40%. So if the seller's broker kept 30% and then paid the seller's sales associate the remainder, how much did the seller's sales associate earn on this sale? So what we need to understand is we just need to take out the buyers completely and figure out how much the seller listing broker got, and then how much of that split actually went to the sales agent. So again, I'm going to try to do my little camera thing here. So, sorry about that. So first, what we have is this working? Yeah, there you go. Okay. So the purchase price was $329,985, and the total commission was 5%. So that's an easy calculation. I just take those two numbers and multiply them by themselves. So the total commission earned, what the seller had to pay, was $16,499.25. So next, what we have to determine is how much the seller broker slash listing broker got to receive out of this. The question says they got to keep 60% and 40% went to the buyer. So next I take the 16,499.25, which is the total commission that the seller paid and that was earned, and I multiplied that times 60%, which is the amount going to the seller broker. And that results in a total of $9,899.55 that the seller broker was entitled to. And again, I go back to the question, and it says if the seller's broker kept 30% and paid the seller's sales associate the remainder, how much did the seller's sales associate get? So if the broker retains 30%, then the seller's broker's agent gets the 70% of that 9,899 figure. So 9,899 and 55 cents times 70%, which is the split that the listing slash seller broker's agent got. So they walked away, or he walked away with $6,929.68. So the right answer here is C. Okay. All right, so let's look at 14. On the sale of any property, a sales associate compensation is based on the total commission paid to the broker. The sales associate receives 30% of the first $25,000, 40% of the next amount between $25,000 and $75,000, and 50% of any remaining amount exceeding $75,000. If a property sells for $234,500 and the broker's commission rate is 6.5%, what is the sales associate's total compensation? So again, let's start with what the purchase price was, which is $234,500, and then we have to figure out what and the sales associate compensation is based on the total commission paid to the broker. So we have to figure out what the total commission was that was paid to the broker. So the broker's commission rate is 6.5%. So if I take the purchase price, which is $234,500, and multiply it times 6.5%, then I know that the total commission that was paid was $15,242.50. Okay, let's figure out if there was another broker involved 40%, 50% of the remaining amount exceeding. Okay, so this now we're just figuring out there's no other second party broker or agent involved here. So the listing / selling broker got the entire $15,242.50. What we're trying to figure out now is how much of that actually goes to the sales associate. So it says the sales associate receives 30% of the first $2,500. So I take my $15,242.50 and subtract $2,500 from that so that I know how much is left, and that's $12,742.50. So he gets the 30% of the first $2,500, so $2,500 times 30% is $750. So that's the first step of what the sales agent gets. Then he gets 40% of the next amount between $2,500 and $7,500. So the difference between $7,500 and $2,500 is $5,000. So he gets 40% of the next $5,000 because I know that there's $12,742.50 left. So 5,000 times 40 is 2,000. So I put that with my $750, which was the first step of what he gets. And then it says, and 50% of any remaining amount exceeding $7,500. So I have to go back to my $12,742.50, subtract 5,000 from it, and I have $7,742.50. And it says he gets 50% of any remaining amount exceeding the $7,500. So 50% of $7,742.50 is $3,871.25, and I add the 2,000 and I add the 750 to that, and the total amount that he walks away with is $6,621.25, which is B is the right answer there. So you just have to just take a piece of paper and pencil and just work this out with your calculator and take notes and just do it all in the steps there. 15. The federal law that makes contracts originated, negotiated, and executed over a combination of a computer and cell phone enforceable is the DUETA, and I promise you will not be tested on that. 16. The amount of commission paid to a sales associate is determined by A, state law, B, the local real estate board, C, mutual agreement with a broker, D, mutual agreement with a client. And the answer is C, mutual agreement with a broker. It's whatever you decide and agree to with a broker, and that's set forth in your employment contract. 17. A broker was accused of violating antitrust laws. Of the following, the broker was most likely accused of A, not having an equal housing opportunity sign in the office window. That is definitely a violation of law, but not of the antitrust laws. B, undisclosed dual agency. Again, that is a violation of the local licensing laws or state licensing laws, but not of the antitrust laws. C, price fixing. We do know price fixing is one of the elements of antitrust law, so that's the right answer, C. And then dealing in unlicensed exchange services. I'm not even sure what that is. 18. A real estate broker was responsible for a chain of events that resulted in a sale of a client's property. This is called A, pro forma, B, procuring cause, C, private offering, D, proffered offer. You're just going to have to memorize what a procuring cause is, and that's a step, the beginning step in a whole transaction, a whole different level of steps that get you to the final end point of a sales transaction occurring. 19. A sales associate wants to be classified by the IRS as a qualified real estate agent, the equivalent of holding independent contractor status for tax purposes. So again, a 1099 contractor or an independent contractor. The sales associate must meet all of the following except, remember I said there were 3 things they had to meet. A, receive substantially all the income from the brokerage based on production, not time worked, and that's commission, so that's one of the things. B, perform all work unsupervised by the managing broker. That's kind of silly because that's one of a broker's job, is to kind of supervise your work. C, hold a current real estate license. That was one of the things that was required. And D, have a written agreement with a broker stating the sales associate will not be treated as employee for federal tax purposes. So A, C, and D is what is required. B is the right answer. 20. A real estate sales associate classified by the IRS as an independent contractor receives A, monthly salary or hourly wage. That's incorrect. That would be an employee. Company provided health insurance. That's also incorrect. You never get benefits if you're an independent contractor. C, a company provided automobile. Don't know about that one. D, a negotiated share of commissions on the transactions. That is the correct answer. So we'll talk with you soon.